Welcome to this series about capacity and capability building to craft and shape operations enabling adoption and adaption. As we go through this journey, we take a more in-depth look at selected aspects with a focus on business issues around technological transformation. With these being more in depth on heavier materials, please feel free to review the takeout points if in a rush. But also take your time to go through, pause, and get the real benefits. We hope the skills and expertise shared is of value to you and those you support in this changing world. Please subscribe, add your comments, and share with others. This week, we look at aspects of the evolving regulatory regime around the automation of knowledge worker services and the use of artificial intelligence. Considerations include regulatory regime will evolve for the use of artificial intelligence and will use AI and automation in its compliance. Regulatory often lags the business environment, but significant changes are likely with impacts to revenues and more. Risk management regulatory changes and the provisioning of risk-like contingencies or regulated financials like Basel is part of the evolving mix. Vendor dependency is emerging within the regulatory regime, whether it is in the sovereign risk or concentration within a market. Accreditation and certification revisions within regulatory regimes are expected to be part of revised regulatory requirements. AI alone does not fix the systemic regulatory issues. Rather, it will be a contributing component to the issues as well as in addressing them. Please enjoy the rest of the video. Thank you for staying. In looking at the regulatory regime around artificial intelligence, we will use algorithms as an example for business and regulatory impacts. And it may be of advantage to watch our video around Facebook and algorithms. The link is in the comments below. Obviously, there are a range of industry-specific regulations or sectors, and our focus is on the imminent or likely rather than the futuristic. Also, the regulatory regime often lags the business and technology changes, but such changes can have a significant impact. E.g., the early signs of cryptocurrency regulation impacting risk. This is a major area of change to a business through knowledge worker service automation and the use of artificial intelligence. Considerations for regulators and businesses include: look no further than Facebook and how the use of algorithms changed its business and its risk profile with increased risk of lawsuits, brand damage, and likely regulatory changes. For a bank, AI will likely see changes in operational risk with revised capital allocations for risk management, which may be enforced by regulators. Another area of risk for regulators is the change in vendor dependency as operations are automated and AI is increasingly used. Regulators may enforce a spread of vendor dependencies and set limits on services. For a country, critical industries dependent upon overseas providers may provide sovereign risk as well as political risk. Operations. AI and automation bring changes to business operations. Examples include, with processes automated and operating end-to-end, revised service models are used. For a regulator, a need for manual intervention with the required accreditation and certification may be a requirement, e.g., pilots and automated aircraft. Consider the accreditation for minimal animal welfare management levels. A small business can consume accreditation services from the cloud with supporting analytics to assure the levels of its staff. A regulator may then require assured accreditation from both the shared services provider as well as the small business. Business operations can provide derived information products to other areas of business or integrate the derived products into further processing. This may change the regulatory requirements for an area of business. Revenue. Opportunities for new markets, additional products and services, and alternative revenue sources is a driver for the use of artificial intelligence and automated services. The use of algorithms to monetize customers and their content is seen in social media as well as traditional media companies. Making use of AI for customer analysis and focused offerings. From privacy through customer complaints to class actions, issues are starting to emerge and regulators are responding. The social media and Facebook examples are the start and are at the simple end of the regulatory regime and related legal cases expected. Use of AI for automated provisioning of orders, transactions, services, and products is rapidly emerging. That of knowledge worker transactions is also starting and provide revenue opportunities. For the regulators, the need to protect consumers will correspondingly evolve, especially in relation to legal actions and political pressures. Social media and the monetization of customer content is an example of business-specific algorithm revenues. As services are automated and business opportunities realized, specific regulatory changes will emerge with corresponding revenue impact. Costs. The use of AI and automated services is often about cost saving. Considerations include lower costs through automated operations is likely to be regulated through the impacts on customers rather than direct regulatory. With the use of cloud-based services on demand, there is often a reduction in capital expenditures, CapEx, with a freeing up of capital and greater operational expenditures, OpEx. From internal budgeting to market disclosures, changes are seen within business. For regulators, changes within an overall corporate governance is the likely method for initial compliance changes. Changes in headcount and service provisioning are also set to occur from the use of AI and automation. Compliance. Already, various regulatory regime changes are starting to be seen to accommodate artificial intelligence, as well as some likely areas mentioned in this session. Other considerations include emerging regulatory regimes are set to continue and to increase with corresponding business impacts. Automated monitoring for compliance is likely to increase within business operations and within regulators. Regulators are likely to increase reporting and monitoring using AI, having more complex analysis and patterns for compliance. The patterns are likely to be predictive and responsive and become increasingly sophisticated with automated response management. Audit. One area of business for illustrative purpose is audit. Aspects of audit are well suited to AI and automation, while other aspects are less appropriate. Considerations include audit will become part of assurance for AI outcomes. AI will play an increasing role in the auditing of business operations. Regulators are set to make increasing use of audit in their assurance, as well as use of AI for the monitoring of AI outcomes. These are just a selection of the business areas impacted by AI and automation with related regulatory changes. For regulators in the emerging automated knowledge worker operations and in the use of artificial intelligence, a range of issues are emerging. Some of the aspects can be addressed through existing regimes, whilst for others, changes to the regimes are required. Regulatory regime. This is the regime which applies and covers, amongst others, regime stakeholders. Who are the stakeholders within a regime and the applicability of the regime to the stakeholders. Consider being able to regulate AI within financial services, which may have issues within payment providers versus banks. Incumbency regime. Any regime is influenced by incumbency and the purpose to which the regime was applied. An example is the regulation of cryptocurrencies with existing legislation. There is then the additional challenge of applying AI to enforcement of cryptocurrency issues and making the case of the validity of these actions. Incremental change. Regulatory changes are often made incrementally against existing regulations which are open to interpretations. Such changes take a while, offering opportunities for some. Regime applicability. Some of the nuances of automation and AI include ownership. Who is the owner? Like self-driving cars and outcomes from the Internet of Things, clearly defined owners are often missing, and this is a challenge for regulators to address. Relevance. The relevancy of the regulatory regime is a factor. Trying to manage financial service regulation for AI outcomes may not apply as there is a gap in the regulations around AI. Again, an area to address for the regulators. Regime variability. Regulatory regimes vary within countries as well as cross borders. An AI operation provisioned in one country with multiple derived data sets through AI sourced from different jurisdictions impacting customers in various areas has its nuances and complexities. For the regulators, managing the situation will be part of the revised regulatory regimes implemented. Risk and behaviours regime. AI and automation is about a risk-based approach requiring an emergent behaviour for its design, development, implementation, operation, and assurance and consumption. This will carry across to the regulation of AI and the use of AI in products and services. Risk management. Regulators often operate on a risk-based approach with interpretation of rules and prioritization on a risk-based approach. Businesses interpret the response and their responsibilities on a risk-based approach, often with guidance from regulators. The challenge for regulators is to carry this approach forward with AI and with the use of AI. Emergent management. Regulators often manage to an overall emergent behavior. In addition, regulators know how difficult it is to legislate and enforce behaviors. With AI and automated knowledge worker services delivering outcomes and decisions, which can be considered as behaviors, regulators are faced with roles and responsibilities for AI outcomes. Assurance. For regulators, the issues like benchmark testing of AI for algorithms and data, the auditing of AI, and the overall assurance framework taken to AI and automation are evolving issues. The risk-based approach and emergent behaviours are to be assured from the required frameworks and operations. Again, this is an emerging challenge for regulators around AI and automation. Other factors. Regulators are managed by human beings who live in the real world with similar motivations as the rest of us and are subjected to action pressures. The pressures to act or not act based on media, political factors, internal relationships, external relationships. The challenge for regulators is where these factors become in the AI responses and management regimes, having real-world impacts which flow through the automation. Vested interest. Also coming into play is vested interest. Regulators put in controls and processes to manage the response to vested interests. Such controls and processes will need to be revised around the adoption of AI. Short-term versus longer term. Regulators are also faced with the challenge of the short term versus the longer term against the rapidly changing environment brought by technology. The overall principles and the charters often remain valid because what we do changes slower. It is how we do it which changes fast. A selection of regulatory impacts possible from the use of automation and artificial intelligence are presented. For regulators, use of AI as a tool is increasingly being used whilst they address the changes required to protect consumers from AI-based services. Businesses, AI is part of the compliance and regulatory operations but with changes in technology come revisions to service models and revenue. Please remember, in 2017, Australia had a Royal Commission into Banking which lasted over 2 years. This inquiry came after an extended period of demand for the Commission. While changes have been seen, common complaints include the regulators were not included within the scope, the actions of companies auditing banks were not included, clear governance failures were not followed up, and regulatory change has been minimal. The lack of perceived accountability remains. AI is not going to fix these and other problems. Rather, it will just be a contributory factor to the regulatory environment going forward. Thank you for your time. May the skills and expertise shared be of value to you and those you support in this changing world. Please subscribe, add your comments, and share with others.